Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Lior Gantz. Lior runs numerous successful businesses and has traveled to over about 30 countries in the past decade. He's an entrepreneur, an investor. He is the founder of wealthresearchgroup.com, and I am very happy to have him back on the X22 Report Spotlight. Lior, welcome back to the Spotlight.
Thanks. I'm very excited to be here, Dave.
Hey, I'm glad you're here, and here we are at the end of the year. And we see many things occurring all at the same time. I mean, the stock market's going up, most likely going to hit 20,000 points. We see gold is around the $1,100 range. And when we look at gold, people are looking at this saying, wow, why are precious metals down so far? Is this a trend that's going to continue downward, or do you see something else happening in the precious metals market?
So Dave, gold and silver are not standalone assets. You need to measure them in accordance to other currencies and other investment vehicles that people are choosing over them. So bond yields have in the 10-year Treasury has gone up to about to over 2%. People are choosing to opt out of gold and go into bonds, and the U.S. dollar is very, very strong as of late, and people are choosing that to track that trend as well over gold. What is interesting is that this is the U.S. dollar-based gold, price that's going down. But in Turkey, for instance, the government is encouraging people to convert their foreign reserves of dollars, because the dollar is so strong, into gold, and take this opportunity to convert strong dollars into weaker gold. So you've got a lot of things going on with gold. We always track the gold price by dollar, but other currencies are come into effect as well. Here's a few things that the listeners need to remember. With regards to tightening periods, we've had, since the fiat monetary system started in 1971, we've had three major tightening periods where the Fed has raised interest rates between 72 and 73, 77 and 70 in 1980, and 2004 to 2006. Each time, the second rate hike, which is what we just experienced, has caused the gold price to outperform the S&P 500 by an incredible margin. And the reason is the inflation gouge that appears after the Fed raises rates for the second time is incredible, because the confidence in the economy is much higher. People spend more. People are borrowing more. And think about this. Rising rates are very favorable for banks. They want to lend when rates are higher, right? So if you're expanding the economy again with fresh credit, with new credit, then inflation rises. Inflation rises and bonds yield rises, but the real interest rates stay at the negative level, and that's very favorable for gold. And though in the short term, it's unclear what's going to happen in the short term. Obviously, in the long term, real interest rates are close to negative, and it's going to take much more from the Fed to raise rates if they want to get it out of the negative real interest rate, and they can't do that. The flexibility they have with raising rates further is very challenging for them. If they raise rates, that's going to stop borrowing for homes. Homes are going to become more expensive, and people are going to borrow less to buy new homes. They're going to borrow less to buy new cars, and many other things that work because we have cheap credit. So they have to play around with with interest rates only at these low levels, about around 0.5% or 1% at the most. But when you figure out inflation rates, you're still at the negative zone. Why people are selling gold? End of December is always a time where people are more involved with moving into dollars because they sell for tax incentives and all that. So we need to see what happens in January. January is the real month to see where the trend is with gold and silver. Here's the big thing about silver, though. The J.P. Morgan and Deutsche Bank, they paid fines right now for admitting to fixing and rigging the silver market. I want to just briefly tell you how absolutely immoral this is like another planet. J.P. Morgan is the largest hoarder of physical silver on the planet, and I hope you heard me right. They have about 550 million ounces of physical silver. They're the largest client asking physical delivery on the COMEX. On the flip side, they're the client that makes the most short positions on the COMEX. So they use the SLV because they're the custodian. They know everything everyone's doing. It's like a poker game where they see everybody's hands and we don't see what they see. So, a client can call them up and say, hey, I want to place a trade. If they know that he's taking a large trade, they can use that to short the paper phony contracts and take physical delivery of cheaper silver. That's why they have a perfect track record at shorting silver for 9 years. And here's the question. Why are they doing it? Why are they profiting on one end from shorting the paper phony contracts leveraged about 252 to 1, and on the other hand, accumulating the real physical silver, becoming the world's biggest silver bug? It's because they know what's going to happen. And what are you going to do personally when you know that you are holding in your hand the winning hand? You're going to wait and wait until it becomes the perfect time to stop shorting the paper market. And I think JP Morgan, once they do that, you better be ready, you better be prepared, because silver is by far the most monopolized market on the planet, and it's close to insane what's going on right now. And personally, I think they told their lawyers and their think tanks, let's just pay the fine. It's peanuts, and get everybody off our backs so we can start doing this. So we can continue doing this with people perceiving that we've stopped.
Lior, I just want to go back for a second. You said something that J.P. Morgan, they know what's coming. When you say that, what do you mean they know what's coming?
Well, I'll put it this way: the business world is divided into two sectors. There's the government side and the central bank side to the business world, and there's the private sector. The private sector has many bright features going for it. There's fantastic companies out there, fantastic businesses that provide a lot of value for many people, and these businesses will thrive. The problem is not so much with the private sector, it's with the measuring stick of everything we price in this world. So everything is priced in dollars, and who manages the dollar supply, the measuring stick for everything we know is governments and not the private sector. And so what I think is the problem is that you've got the people with the wrong incentives and with absolutely hidden agendas running central banks and running governments. These are not people who get up in the morning and want to add value to our economy. They want to have lavish lifestyles on the expense of everyone else. This is a credit-based system. That's the idea of having a credit-based system. Reverse the roles between you and a central banker for a minute and understand this. He gets up in the morning and he understands that if he gives you the picture that everything is good, you'll go ahead and borrow funds. And when you do that, you're giving him the lifestyle that he always wanted. And that's the same. It goes the same for government, especially in the U.S. when they can simply do deficit spending for 45 years already and live like kings. Because we toil, we sweat, we do the productive work, we come up with the new ideas, the businesses, and I just think that J.P. Morgan knows, as well as they know, that this system is inherently faulty, and the main issue here right now is the fact that the private sector is not borrowing new funds like it did between 1980 and 2000, when the demographics of the Western world were favorable and young. Now the demographics are much older and people are not borrowing. And that's why in spite of all of this money printing, you're seeing a contraction in the money supply, because the private sector doesn't go to the commercial banks and borrow money. In fact, people think that zero interest rates are a great stimulator for borrowing money. But let me tell you, Dave, as a retiree, get in the head of a retiree for a second. Let's say you have $1 million and you were banking on the fact that you will be able to find a bond that pays 5% a year. You'll have 50 grand every year and you'll live from 65 to 85. That's $1 million worth of funds that you planned on having from 5% per year, right? For 20 years. So 50K times 20, that's $1 million. Now that $1 million is gone. What do? If you're approaching retirement? You save up, because you know you're missing another $1 million for the next 20 years. So you save up and you save up, you close down debt levels and you save more. That's very deflationary. And that's what people are doing. They're not trying their luck in new businesses. If you're 55 or 60, you're not going to go to the bank and open up a new business. You're going to save like you've never saved before, because you want to find a way to replace that income that you thought was coming your way. And by the way, a wealth research group, if you go on the website, on the top menu, there's a tab called Wealth Stocks. And what we did for your listeners is we, for almost 60 days, we've researched the entire plethora of companies that yield more than 8%. And we found 2 companies that yield 8.5%. And the report is right there. It's called Income Champions. It's free. Download it. And you'll find 2 great companies that you can consider owning that pay an 8.6% dividend. And they're very solid companies. And it's a great alternative for retirees that are looking for current income.
So you mentioned that J.P. Morgan Chase, they're hoarding silver. Do they think that the price of silver is going to increase? Is this why they're...
It's more than that. They know that the price is undervalued. They are the ones who are fixing it. They're the one who are using the leverage of the paper market to short it, to crash it at times. They are playing both sides. Their left hand is shorting paper contracts. Their right hand is asking for delivery on physical silver. It's one of those incredible out of this world scenarios where you've got this going on. And regarding undervalued, every measure you take, silver is incredibly undervalued. There's there's two things that are interesting about silver. First of all, it's the best conductor of electricity on the planet. You can't replace that. Okay, it's not replaceable. So on an industrial side, it's incredibly important. It's applicable to so many thousands of industries, from medicine to industrial. It goes into purifying. It has countless applications. And then you've got that monetary aspect of it that most people forget, right? But inside of our community, we know that silver has been a monetary unit for thousands of years. Since the Roman Empire, the Greek Empire was built on silver. The Ottoman Empire, the latest empire to have silver in circulation, just it's withered and died only 100 years ago. Silver is the quintessential monetary unit for many of the empires that were built. But its attributes are incredible, and so you've got that aspect of that. And then on the flip side, there aren't many primary silver miners. Silver is a byproduct of base metal mines. So you got to realize if silver becomes in shortage, it's not like you can call a few CEOs up and say, "Hey, ramp up production." It doesn't work that way. There aren't many primary silver producers. So there's a serious problem here, because silver, unlike gold, is being consumed in tiny little bits inside of all these electrical devices that we all use. And once we throw them away, you can't recycle that silver. That silver's gone. It's not like gold where it's still here above ground. It's gone forever. You mine it, you use it, it's gone. Silver is very, very unique in that perspective. And you know what? We've published a special report about all these attributes of silver, and you can just go to wealthresearchgroup.com/silver leverage and just download it. It's free, and you'll see the amazing attributes of silver just as a metal, as an industrial metal, as a monetary metal, and more about the history of silver. And that's what I think JP Morgan sees, on top of the fact that this is the only commodity that has not surpassed the 1980 high that it did. All the other 29 commodities that are being tracked, they've all passed and repassed those values. Think about it. Think about a world record in athletics that no one has broken in 35 years. That's unheard of, right? That's what's going on in silver.
By the way, I'm going to put all these links at the bottom of the video. So everything that Lior mentioned, I will put at the bottom of the video to make it easier for people to go get those reports. I wanted to get into the stock market right now. What we're seeing is the stock market is continually moving up and up and up. Does this have any bearing on what's really going on in the economy? Is the stock market giving us a picture that, oh, the economy's fine and everything is great? What are we seeing here? Why is it continually moving upward?
Sure. Let's split the stock market into two, okay? Let's use the broad indices that hold international companies that do business all around the world. And in many places in Asia, things are booming. So there's that aspect of it. But those companies could suffer under Trump, because what he's trying to do is make sure that jobs stay in America and new trade contracts, etc. That's why you're seeing companies that are smaller and trade on the Russell 2000 absolutely explode. People, investors, are betting on the fact that U.S.-based companies that serve the U.S. population and do not get their products from abroad, they will flourish under Trump, because he's trying to strengthen the U.S. economy by strengthening the manufacturing base and having new trade agreements. The risk in doing that and obviously he's aware of it, but I just want to put it out there. Free trade has robbed the U.S. of tens of thousands of jobs in the last 30, 40 years, and more detrimental, it has shipped out all the amazing secrets, commercial secrets and business secrets that the U.S. Economy was based on to Asia, South America, and all these manufacturing hubs that the U.S. built, that multinational companies build outside the U.S. But it has also kept an insane amount of dollars in circulation abroad, and trade agreements could create a scenario where foreign governments, foreign corporations, and people holding dollars, and think about it, 71% of the world's currencies is dollars, with 50% of them being outside the U.S. If those dollars come back to the U.S. banking system, you can just imagine the type of inflation that would create. And that's part of the reason why a lot of governments are dumping treasuries right now at a fast, really rapid pace, because they don't know what the Trump policy would be regarding the trade agreements. And if there's going to be new barriers, then one of the implications of that, the negative implications, might be that they'll wire a substantial amount of dollars back into the U.S. banking system. So you've got that danger lurking with high inflation. To get back to your question, business isn't booming as a whole. There's many problematic and challenging sectors of the economy, but what I think is driving prices higher right now is a Trump effect, but I don't think it's fundamentally true. It's an effect. It's a trend that people are pricing in the infrastructure plans, and that's why you see a lot of industrial metals going up by percentages that we're not accustomed to. Aluminum and copper has been up as of late. The only metals that I think are justifying the price increases that they have are zinc, cobalt, and to an extent, I think another metal that people should pay attention to is lithium. But the reasons is zinc is one of the most important metals for coating and anti-corrosion on the planet, and the largest consumer of that is China, with their mega projects and their incredible car industry that is booming, and they need all that zinc. And there's been 2 major zinc mines that have closed this year, and there's a real supply shortage in zinc. So zinc is the top metal performer in 2016 with almost 80% increase, and those confirming ups mean that in 2017 it will keep continuing. But by the way, we are going to profile a company in the zinc sector in the first quarter of 2017 that we feel is going to be maybe the top zinc performer in the entire TSXV and on the American exchanges. Zinc is an absolute bull market right now, and it would continue going into 2017. Same thing for cobalt. I don't know if you know this. It's a very green metal. It helps the green revolution. It's very futuristic. And the beautiful thing about cobalt is if you find more of it, you'll find more applications to it. So there's an insatiable appetite for new cobalt to be found. And again, Wealth Research Group will be profiling a company that we've been researching for 90 days now in the first quarter. So definitely, if you're not a member, you can just go to the website on the homepage and just take it to a test drive. It's free, and you'll get an email alert with the full report on that. business as a whole is not justifying these prices, Dave. It's the low interest rates that are moving prices up. Once interest rates rise, it's like a weight on asset prices because people are judging the S&P 500 against the yield, the safe yield that they can get in other type vehicles, instead of taking the risk with stocks and with the dividend they pay. So I hope that answers your question.
Yes, and let me ask you this. We've seen the market rise like this. Back in 2008, it reached all-time highs of like 14,000 points. If you go back to 2001, you go back to the 70s, you go back to 1929. From your research and everything that you're looking at, do you see that we're hitting the top of the market, or we're getting close to it, and we're going to see major sell-off of the market?
There is an amazing amount of cash on the sidelines. And so a crash in the broad indices is not something that is so probable like 2008. 2008, the market crashed because there was a credit crunch. There was no people, institutions, corporations, governments that were out of cash. They lended out so much that people had to liquidate everything they had to pay off. This is not the case right now. And so it would be a lot different. I believe a crash could be coming, but it would not look like a 2008 type scenario. It would be something else altogether. The fact of the matter is this combo of high dollar on the index against other currencies and high stock market is exactly what happened at the dot-com bubble. So this combo of strong dollar and high prices on the stock market is very alarming, because every time that has happened, we've had a rough year going ahead. So going into 2017, the best thing that investors can do is have an intelligent asset allocation and be diversified, not only among your stocks portfolio, but between different asset classes. So you want to have some exposure to physical gold and silver as cash hedges and as insurance against just reckless policies coming from central banks around the world. You want to have exposure to current income vehicles, so high yielding stocks like the ones I mentioned before, and other alternatives like we talk about often at Wealth Research Group for retirees, and just a safety net of income coming in. You want to have exposure to explosive industries that could rise and thrive because of what's going on in the world. There's many positive aspects of the world economy that people should take into effect. Listen, the demographics in the Western world are indicative of what's going to boom. So 80 million people in the States are retiring. That means a lot of money will be going into research for biotech, nanotech, pharmaceutical, marijuana. Is becoming a more regulated and legit industry, and healthcare. And we talked about this at length at Wealth Research Group. In fact, if you can put a last link up there, it would be wealthresearchgroup.com/future profits. And that's talking about that report is going into what's going on right now in revolutions in life extension and genetics, and companies that will be positioned for that, and shareholders that will be positioned for those companies could make an insane profit. And the Trump administration is very advantageous to these industries. They want to invest in those industries. They're going to move a lot of substantial funds into research for pharmaceuticals, And that's important going into 2017 and how you position your portfolio. Besides that, I've always loved real estate holdings, and I think the important thing to understand is I don't think there's much upside for flippers or anything like that. I don't think it's that type of environment. I focus on cash flow and on rentals, and I think in the States, the mortgage industry will not be coming back for years and years, and so the rental industry would be very stable, and people should think about, especially retirees, should think about owning a few homes and getting income that is not dependent on the stock market, right? It's outside the stock market altogether. Just make sure that you do your research on where you're buying your real estate, because real estate obviously is dependent on incomes and jobs. So you want to make sure you're in strong job markets. They just to make sure I'm clear. I don't think there is such a thing as a saver who's not an investor in 2017. I think the central banks and this fiat monetary system has basically forced all of us to make investment decisions, because we have to worry. If we're just saving cash, we have to worry about the value of the cash itself. You know what I mean? It's not like you can say, hey, I don't want to invest. I don't want to be an investor. I just want to save. I just want to have cash. Well, that cash is also at risk.
Yes, it is. Of course, it's being devalued. Many people are saying that cash is, the dollar, I should say, is at its end game. And Lior, where do you think the dollar is headed at this point? There are some out there saying that the dollar is at its end game. There's going to be other currencies that are going to replace it. Coming down the line, what do you see? Do you think the dollar is at its end game? Do you think there's a replacement out there? Do you think the dollar will still be the reserve currency?
In 2017,
yes.
I don't see any major changes to that status. Here's the way you should think about it. When did the dollar become the reserve currency of the world? It was after what? After World War II. It took a very it took a stupendous, tremendous event in human history for one country to have that confidence from the rest of the world and become a reserve currency. Which country do you trust? Do you entrust right now to give that status to? It's not that the U.S. can be trusted. They're the largest debtor nation in history, almost $20 trillion in federal debt right now. But the replacement is the problem. And so all the countries in the world are basically on the same boat with regards to the dollar. It's not like there's some countries that are outside of the dollar system. And so a crash or a crisis in the dollar is detrimental to every person on the planet. And so obviously there's think tanks in Europe and Brussels, in New York and London, and every financial hub in the world, in China, that are thinking about what to do, how to replace this, how to do this correctly. But I don't see anything major happening in 2017. What I do think is happening, and the reason that the dollar is strong, is on account of technicalities and not fundamentals. Obviously, right? The dollar is an intrinsically worthless currency. It's not like it has any value that people perceive now, and that's why they're buying dollars. They're buying dollars because they're liquidating other assets. They're buying dollars because the U.S. has raised interest rates for a little bit. There's so many technicalities that go into this dollar rally, but it's nothing fundamental. And so I don't put too much into it. The other thing that makes the dollar strong is debt deflation. So when people are closing down debt levels, like I told you before, the private sector, that is clearing a lot of dollar supply from the system. And so when you when you clear, and there's $2 trillion that has been cleared from the U.S. Dollar supply in the last 4 years. Just think about it, Dave. $2 trillion that were circling 2-3 years ago are gone. That makes the dollar more rare, right? It makes it rarer. And so it goes up relative to other currencies, but you got to measure it as against gold and silver, right? Against the ultimate forms of money and against other assets. And so in the long run, there will be a new system that will be ushered in. But unless we have a cataclysmic event in 2017, I don't see it coming in 2017. In my perspective, and I've told you this, as long as this is an ultra low interest rate environment, and as long as the problems in Europe persist, holding gold, bullion, physical gold and silver is a wise choice. In fact, it's almost insane, Dave, that people just don't own 5 to 10% of their wealth in gold and silver. I mean, why wouldn't you do it? What's the downside to doing it? It's almost incredible that people have everything they own in all their savings, right, in currencies and not in money. But right now, only 0.85% of world assets are in gold reserves. And so if you think gold is in a bubble or gold is too loved, it's definitely not. The historical average has been about 3%. So you need people to have 400% more gold exposure for this to be even historically average. And I'm talking institutions as well. So with regards to that, I see a lot of upside for gold and silver going forward. And this bull market is at the beginning and not the end. It's a very interesting year that's going to happen with 2017.
Lior, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Wealthresearchgroup.com. And then I would say go to the top menu, click on special reports. That's where we have the rich plethora of information from resource sector to retirement to timeless principles of success in the stock market. And if you want to gain access to everything that we don't publish on the website that goes out to our membership, the free membership, then just sign up. And we talk a lot about big picture and what's going on. And the thing that distinguishes Wealth Research Group, I would say, is the amount of research we do to make sure that you get the best charts, the best graphs, and are always emotionally and financially prepared for what's going on. And that's exactly how people should just find us.
Lior, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Thanks a lot.
Thanks, Dave.